we've got our fundamental expert Gaurang Shah of Geojit BNP Paribas, who's with us on the show. And let's take it straight to his growth pick, which comes in the form of a Cairn India. Take a look.
Cairn India started as the Indian arm of the London-based Cairn Energy and is currently one of the biggest oil exploration and production companies in India. Last year, London's Vedanta Resources bought a majority stake in the company for about $8.5 billion. The company's revenue for the third quarter was completely flat, largely due to higher royalty payments. However, the company's output capacity looks promising, as its Bhagyam field has recently started production. This, along with the production at its other fields in Mangala, Rava and Cambay, will help ramp up output to about 1.75 lakh barrels per day by the end of this financial year. Also, the company's oil discoveries in Sri Lanka have entered their second stage of exploration and is expected to help output further. However, Cairn's fortunes are constantly at the mercy of fluctuating crude oil prices and the rupee-dollar exchange rate. Any major moves in either of these two factors could impact the company's profitability.
Alright, that's the pick coming in from Gaurang Shah's stable in the form of a Cairn India. Gaurang, given the way that crude oil prices have gone through the roof, given those geopolitical concerns, and also the stock has underperformed off late but has seen an outperformance over the past few months, and the Bhagyam production has commenced in the month of January, most of the analysts believe that the period of stagnant volumes for Cairn India is now behind us. Would you agree?
I would definitely concur with that, and it's not only on the domestic front, Avan, that Cairn India has been quite successful. They also have their operations in Sri Lanka, and phase 1 was successfully completed in the exploration side. Phase 2 will possibly commence anytime soon. In the Rajasthan's block, we've seen reserves only grow. And of course, if you have to take the cue on the commodity side as far as crude is concerned, well, there is only one way to go for crude as of now, immediately in the short to medium term, that is up north, given the kind of geopolitical issue. Not to forget, Avan, we are seeing these prices of crude in the dollar terms in a time when there is a huge slowdown across the globe. In case if the economies of those countries, maybe Eurozone, maybe US, has to recover, or even in the Asia-Pacific front, then the consumption is definitely going to go up. And also there is another positive for Cairn India. They book a large part of their revenues in dollar terms, and most of their production has already been tied up for the next 3 to 5 years. Given all these huge positive factors, and also that the stock, I think, recently made a new 52-week high, close to about 390, we have a very positive coverage on Cairn India with an initial target about 435, and we will not hesitate to upgrade it further, given the kind of fundamentals that the company has.
Gaurang, some of the risks that most of the analyst community has with respect to Cairn India would be delay in its production ramp up, not enough demand, therefore inability to sell oil production from the Rajasthan block, and finally the reserve increase being well below prospective resources valued. Which one would you believe would be the biggest concern? Do you think it can overcome these fears in the long term?
Given the kind of technology and the backing that the company has got, I feel that these are all short-term negatives, and one has to understand exploration, whether it is oil or gas, is a long gestation period, and you have to do a lot of seismic study and geographical study before you undertake any of these. I am of a firm belief that these concerns which are there will only be a short-term negative, and in fact I would advise that in case if there is any negative news on any of the fronts, as you have given your verbatim, Avan, I think it's going to be an opportunity to get into the stock rather than exit.